Hey everybody, happy Friday. Sorry, I had to update my restream to get all my channels pushing. So it's just after 3 p.m. on the 21st. Happy Friday. Pretty interesting day. Down. The week ended up finishing red. We are sitting here just like I thought for a lot of the analysis, which is these highs, the market is responding. So we are down for a pretty big push the last couple of days off of the recent all-time high that was made on Wednesday. That high to current price is sitting around 2% lower. We're trading at 60.15. I do have a trade in that I'm watching here for the final bit for about 50 minutes now. Let me float this out here. So I have a broken wing butterfly on the SPX. I got filled on that trade for 30 cents. I wanted 50, and I was like, well, if I'm going to take the trade, I'm going to take the trade. Plus, I went out far enough where this is my profit trap. So between 6,000 and 59.90, if we make a bearish push into that direction for the last 50 minutes of trading today, this is my profit trap. So I potentially have a $500 profit trap if I let it cash settle, and I'm perfectly pinned at 59.90 or 59.90, yeah, which is very difficult to do. However, I think the probability is I'll probably just walk away with 30 cents credit and call it good. If the market does come down here in the final, let's say 35, 40 minutes from now, if we're pushing a little bit lower, I might be able to grab some bonus credit out of this and turn what was a 30-cent credit. Instead of closing it out for 0 debit, I could maybe even close it out for like 15 cents extra, maybe 30 cents extra, maybe 50 cents extra. And that to me is a pretty nice win. It might not be perfect in my profit trap at expiration when it cash settles at 4 p.m., but it's good enough than letting the market kind of overshoot where I bring on a bunch of risk. So my risk would be around 5,980. Yeah, 59. No, that's not right. 5985. 5985 is where my risk is going to play in. And that's about 30 points clear of the current market. So I think I'm in good shape. But this one would be something I'm looking at for closing bell. Pop John, you got 55 cents on that trade? Dude, that's awesome. Well, let's hope that you get 55 cents and maybe a little profit trap to go with it. Good stuff. All right. So technically speaking, I'm actually pretty excited about next week's trading for a couple of reasons. The fact that we're getting a sell-off here is going to increase the implied volatility for pretty much everything, and that is good. If we have a continuation of this sell-off, that is fine. This is kind of the necessary cleanse that the market, I think, needed. Technically speaking, it needed a lot of this, and it's not even a big pullback. We're down 2%. But it's enough to be like, well, this is weird. The market doesn't go up every single day. So this is the a bit of a pullback I've been waiting for. I'd like to see a deeper pullback. I'm still going to stay out of the way with a lot of the income trades that I take. So coming into next week, I'm going to position myself for hopefully trades that are even further out of the money with a nice big fat margin for error and get some additional income and just reposition for another like 30 to 60 days. And if price, finds a catching point around these moving averages and then bounces back up, if it obviously comes down a little bit lower, I do have some hedges in. So right now my MES trades are going pretty well. MES is micro E-mini futures, and I have a trade that is going both directions and a trade that's going only one direction. My 62 by 57.25. I mean, I'd love to see this price dropping down to like 57 and change. Taking a $488 risk for an 1889 max profit. If I turn this trade right here, if I turn this into $1,000 of profit, I'd be very happy with that one. On this one, if I turn this into about $500 to $1,000 of profit, I'd be very happy with that one. And if price is going to fall and fall nicely, then it's pretty easy to turn those into profit. Now, that would be a hedge and an offset against what I would be accepting as drawdowns. Let's just take a look kind of top down and see where things are at. Papa John, are you still in those iron condors, by the way? What about those longer dated ones that expire next week? Those have to be looking way better, man. Like way better. I don't know if they're in for profit or not. I closed out for a small loss. We managed them for like a dollar, $1.30, $1.40 loss, something like that. It wasn't that bad. Versus taking on like the $3 to $3.50 max risk, I closed out for a partial loss and moved on. That's part of the management anyway, is like take some of the time out of the equation, manage it early, and that eliminates a lot of volatility. By the way, if I have anybody that's watching that's in my daily profit play service, look for video link coming soon. I'm processing a video right now, and it is currently about 72% processed. So I will get that link. I'm going to see, maybe I can post the entire video, or I'll just convert it. I'll convert it into a Vimeo link. And I'll do that actually while I'm like, by the time I'm done with today's session, I'll be able to post that video. It should convert fast enough. So let's go Vimeo. So I got a little bit more processing to go on that, but I'll get this thing uploaded. And we talked about it this morning, just doing like the mechanics of the strategy and daily profit play, but also looking at a couple of different wrinkles and nuances that show there is a trade-off to have a higher win percentage. There's a trade-off to making a little bit more money per trade. There's a trade-off on average winner versus loser, max winner versus max loser, drawdown percentages. It's little tiny tweaks, but at the end of the day, they still make money. It's just, what are you comfortable with? And to me, the big thing that I keep going back to is, would I rather take 5 or 6 or 7 trades to get back to break even, or would I rather take 10, 15 trades to get back to break even? And I did an example where I actually showed it was like you might have to take like 80 trades to get back to break even, but the win percentage is like 96%. But it's like that would only be allowed if I'm taking like 5 or 10 trades a day, and then I look at it like, well, in a week I'll be back to break even. And that's fine, because you still have the solution, which is trade through it, you know? So anyway, that video's processing now, and I'll post that in a little bit. All right. Let's see here. Condors and now put spreads. Got it. Which are probably looking good then, yeah? So you the SPY, you'd have that like the 576 by 571. SPX, if you rolled those up, those are just put spreads. Those are probably looking pretty good for profit, I would think, going into next week's trading. Yeah, that's good, man. So if you close out the call side, dude, good management. Seriously, that's really good management. Just to wait. Um, I don't know if it was good management, or you just let your emotions like in stubbornness get into it, or it's like, you know what, I'm just gonna let it do its thing, or I don't know what to do. I don't want to close out for a loss. I mean, I don't know what the situation is, but from my angle, being objective, I think you managed it pretty well. You know, the call side cooperated finally, getting out of the call side for break even or better. Now you got a put spread that's way out of the money, and looking pretty good for next week, since we only have one more week in those trades. Yeah. So I mean, and here, I mean, again, let's take a look at it. I know, where do we roll those trades to? Give me a level. I know the 576 on the SPY. I mean, that should be way the heck out of the way. We'd have to have a pretty nasty spill next week. We'd have to have like a 4% drop in the S&P next week in order for those put sides to be in jeopardy. And not only that, but it have to close 4% beyond. It'd have to be beyond 4%, not just tap, not just touch, but close 4% lower for those trades to be a problem. So I think you're in good shape, man. I think it looks pretty good. More than likely, there's going to be some chop next week. You know, the market obviously is getting a little cold water doused on it. I wasn't trusting these all-time highs. I thought it was a little bit of a bull trap, and it turns out, I mean, look at my technicals here on SPX. I mean, this is exactly how I had it drawn out, right? So was I intentionally short this week? No, because I never want to sit here and say this is the top. That's the stupidest thing ever. But I will say that this resistance is responding. Market is coming right back to where we have this chop. It's really just a chop fest, you know? So what is it that turned the market sour this week? I still think a lot of it, regardless of what you're going to see in the news, is we have a technical reason for this market to have a correction. We are 320 plus bars away. We're 11 to 12% above, or 9% above, or 8, whatever. Like the stretch away move. And this is why I put in a watch list on my Thinkorswim platform. Is I built a watch list. Actually, my man Christian built it for me. But I built a watch list item that gives me the number of bars away from the 200 moving average, as well as the percentage away from the 200 moving average. And I also have like a volatility squeeze indicator from the weekly, daily, and 4 hours. So I can get these ideas where all this like compressed energy has to go somewhere. And a lot of times I take a strategy like that, which means I think there's going to be direction. I'm just trying to determine which direction it is. Now, you can stack up your alignments and say, well, this has been an uptrend the whole time, so it looks like it's stacked bullish and the trend continues. But with a lot of these high bar counts, I was looking for these to start coming back to these moving averages. So when somebody's asking bars, I'm asking for candlesticks. So it's this. The last time we touched this red line was all the way back here in November 2023. We're about 325 bars away. And on top of that, we are a percentage amount that is noticeable. Like this is a pretty decent stretch away where this was around 10% away from the 200 moving average. And I don't see an index stretching that far away. Usually, I mean, S&P stretches maybe, 10% is a pretty extreme move. A good example of that would be back here in July to August. This was about 11.5% away, and this thing fell really, really quickly. Now, what was the reason it fell? Oh, it was Japanese yen deleveraging and blah, 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 blah. But technically speaking, we had a decent bar count and we stretched away where it's like there are like reasons for the market to revert. There's technical like evidence and histories where the market only gets so far overextended or so far, overbought or oversold before we have reversions. And trading the tops of things, especially in the stock market, is not my favorite thing to do. This does not mean that I'm bearish at all. Okay, what this is this is what I thought the market needed. Technically speaking, I think the market needs to come back and find some more relevant levels, and we will see if this market is eager to buy the dip. I think the market is eager to buy the dip. I really do. But in order to get it, let's see if we have a correction first and the market does sell off. And through the month of February, perhaps this is going to sell off. Let's see. If you want to grab credit end of day, just close normal. Yeah, you can. So you took the trade for a credit. You took in 55 cents. So you'd want to close out the trade also with a credit if it's offered. And right now, you're probably not going to see that for the next maybe 20 minutes or so. Usually those broken wings end of day are going to be bonus credit as you get into like 3:30, 3:40 p.m. Eastern time right before the close. So here's my trade right now. This is trading for, there's my broken wing on SPX right here. And right now I'm showing a 15-cent debit, so I'm not going to close it out there. I want to see if this will start to change to a credit. Let me circle that. If this changes into a credit, then I'm looking at bonus credit. So how do I get there? Well, if price drops to 610, drops to 605, this bonus credit in the next 20 to 30 minutes could start paying out really, really nicely. My pin price is $59.90. Okay, if price just goes up from here, then I'll just keep the 30 cents credit. Papa John, you can keep the 55 cents credit, and it cash settles at 4 p.m. Okay. All right, Larry, does that answer your question though on the bars? It's just the candles away from the 200 moving average. Okay. I posted a video. So this is for my Newsbreakers course, Newsbreakers service. I posted a members video in the alert section. Okay, it was about a, 10-minute video update. We took some winners today. We had Carvana, CVNA, and ENVX. Took 2 winners there. Toast and Wayfair are looking pretty good. Toast and Wayfair pushing down the direction we want. That's a good thing. Actually, Wayfair might be showing a bit more profit. I think if this closes on the lows, I might close this out on Monday and let the time over the weekend help me out. We should have some real value in the trade. I'm going to double check my numbers here. Wayfair, I need it to be at 41. That's a $7 winner. It's at 41.66. So I've got a 48 by 41. Okay, so $7 max profit and 48 minus current price of 41.68. I've got about $6.32 of real value in the trade, and my debit on the trade was $4.64. So let me take a look and see if I'm trading for. I put in a take profit on this one. It hasn't filled yet, but I'm going to go Wayfair. We're trading over $5 right now, which is good. So I've got a credit in at 564. If this settles over the weekend, it might actually close us out at that dollar profit or better, which would be pretty nice. My max profit is $7. But if I can take my dollar out of that, what would the math be there? I would grab $1. So 1 divided by 464, I'd make 21.5% on that trade in about a week. Okay. Bitcoin, I see. Okay, fine. What's your decision-making process for these trades? I mean, that is a loaded question, man. My brain is, this is probably what my brain feels like. Poker scene. This is probably what my brain feels like. There's just a lot going on, and I don't really know where to start with that question. So there's always a reason for what I'm going to trade. Part of it just starts off with what's the instrument? What am I looking at trading? Is there a directional trade? Is there not a directional trade? So for example, I'll just say SPX. Okay. Um, this week, I put on, this is a good example of just where my thoughts are at this week. I know that we hit some fresh highs. Okay. We hit some fresh highs in the market. I'm a little skeptical of the all time highs, thinking this market is probably due for a pullback more so than a rip higher. Okay. And usually when the bears take over, they tend to slide this market a lot faster than the bulls. So bears, this is the bulls, right? They climb stairs and the bears jump out of windows. That's kind of what today feels like, right? That's what December 18th felt like. That's what this gap felt like. That was a CPI gap that got filled. There's CPI news and drama and tariffs and all this other crap. Uh, Again, bears are way more aggressive, and the market, when fear hits the market, it runs like crazy. But my point is, what have I been doing? I've been taking a lot of trades where this is my margin for error. This is the money and income that I still have. Here is a good example. So right now on on my positions that I have labeled out here, SPX waterfall is in profit. I've got profit on this trade, profit on this trade. Daily profit we closed out for a net win on the week. There's my broken wing butterfly. SPY, I've got some more trades in. So right here on SPY, that is a out of the money hedge that's going to be worthless. That's fine. $50 loss, no big deal. There is a hedge play that was that is up $136, and hopefully there's more to come on that one if we still continue to see a sell off. I have a double up that's going to expire. So part of the trade, my 605 by 600 is profit. Like closeout went out, and then my 111, this is in profit by $141. Okay, so I got some labels there, and then also XSP. XSP is actually down, but I'm not really worried about any of these trades. So there's the market is down. I'm taking on a little bit of heat with some of my wider credit spreads, but these all should be adding up to something around like $500 of credit. And I've got look, XSP would have to fall to 560 to 550 to 560 to 550 to 559. It'd have to fall to all those levels. So let's take a look at this instrument. So XSP. We're trading at 601. I've got to have this thing fall all the way to 560 in order for my trade to be in any type of trouble. So over the next 30 to 40 days, if the index falls almost 7%, I'm in trouble. Now, when I say trouble, I'm risking a couple $1,000s, okay? But if I have the trade work out the way I want it to, I'll probably end up making about $500 or $600 in the trade. I also have a kicker in there where I could potentially make, $1,500 to $2,000 in the trade if price is in between these two levels. So if price is below this but above this, that's my sweet spot. And that trade, I get paid on the debit spread and paid on the credit spread, and there's my kind of double winner. And I can kind of trap the trade there. I also took a trade this week on the QQQ for the same thing. I put in a profit trap here, and I put in a level at 490. So if price is in between here, I get $200 to $300. I actually get $500 here with another $200 here. So a $700 winner if it stays in between my levels. Does that make sense? So Oliver's question is, like I said, there's a lot going on. I'm not making light of it. It's just like, you got to give me a starting point. I mean, there's a method to a lot of my strategies. What am I doing? A lot of it's mechanical, a lot of it's systematic, a lot of it's very repetitive. And then when things are happening on the fly, like the adjustments that I make, in fact, right now, as we're trading for the rest of the day, I do want to look at a trade snap. I'm going to do a quick roll on this one. So let me go into my days to expiration. Coca-Cola is going to get called away for some profit today. SPX, I have the 0 DT on the butterfly. I have some 111s out to February. What's this one right here? What's that diamond account? This one. March 31st. That is a 56, 59. What is this guy? 56. So, okay, that's a 111. All right, never mind. I was looking at the expiration. Okay, let's go here. Snap. I've got one account with some shares. It's not going to get called away today. I'm likely going up 14 cents in the next 34 minutes. So I'm going to go ahead and do a quick roll on this. I've got 100% of the profit on the snap call, which is generating about $186 of income. I'm going to go ahead and issue. I'm just going to do a quick roll on this one, which is trading for right now. This is trading for what? The 1050 for today is trading for 1 cent. So I might as well just roll it out to next week. So if I roll it out to next week, I keep the strike the same. I get 21 cents on that trade. If I roll it down to $10, I have no extra bonus value in this one, right? See, I'd get 49 cents credit for I'm rolling down 50 cents. So my better trade would be if I go out to the end of the month and I get 21 cents, or I could give myself a little bit of profit potential if I'm willing to go out a little bit farther. Let's go to maybe the March 21st expiration, which goes out 21 days. Now I can lower my cost basis by 40 cents. So I can roll it 50 cents up and get a profit. This was actually kind of nice. I could roll it up and get 30 to 35 cents credit, and also lower my cost basis down to like 9.50 and then get it called away at $11. That actually gives me a bigger profit target here. So if I go $9.85 minus, let's say 35 in the credit, get called away at 11 at 300 shares, I make 450 bucks profit. As opposed to, I could do this out to next week. So next week, and I keep the strike the same, grab 22 cents. If I roll it up $1 and still grab some credit on that trade, that's $1.30 of profit. This one, I don't have to touch it. I rolled out 20 cents. Trade off, trade off, trade off, trade off, trade off. I guess I can just keep it the same and lower the cost basis a little bit as opposed to going out more time. I'll do this. If it gets called away at 1050, gets called away at 1050. Let me take a quick peek at Snap here. So I guess my concern with Snap would be this. If I see this price dropping into $9 or so, I really need to spend as much time as I can lowering my cost basis. My break even's $9.85. So I need to lower my cost basis even further, which is not hard to do. But it's like, do I get excited about rolling it out and getting 22 cents? Or do I get a little bit more excited about more credit? Well, let me go out another week. I go out to March 7th. I keep the strike price the same. I lower it now by 42 cents. This one, I actually decrease my profit target by 50 cents, but I get 62 cents credit. That's making an extra 12 cents. That's not a big deal. I'm going to keep it here at 1050. So if I go out by 14 days, get 36 cents, it's actually better. Let me think here. Let me go out to March and roll it down. That only gives me like a 28-cent buffer. It's not great, man. So I'm going to go here for 20. I should get a minimum of 20 cents. I'm going to try to get 22 cents on this trade and roll this thing out. We're trading at 1036. I doubt we're coming back above 1050 by the end of the day. So I'm going to roll this out a week and grab another 22 cents. And if I can keep doing that for 20 cents a week or so, it helps me lower the cost basis. So I'll do that here. Let's go. 22 cents is pending. 21 cents. Let's go. Give me a little bit of a generous fill. Crap. Bid price is 20. I should get filled at 20. All right, just got filled at 22 cents. Good. Okay, so that trade right here is now rolled to 228 expiration. New break even is 9.63. Okay, and let me see if I have Streamwise and Snap. Okay. Fern's accounts, 228 expiration on Snap. $9.63 break even. Have the 228 expiration. 10.50 sell call for 22 cents credit. So the break even is 963. Okay. I mean, I can accept a little bit more heat here. This is also a stock that if we come down to like $8.50, I still think this stock has the ability to range. So from this low, if we come down here, I think the stock can still range back up into the teens. So I'll stick with it for right now. I'll stick with Snapchat for right now. But I'm not trying to hang on to the stock forever. I just want to flip it, make a few $100 on it, and that's okay. All right, we're good there. All right, looking at SPX, still looking good for the day. We're 3:31 p.m. Eastern time. Anything here? SPX, 1, 2, 3. All right, right now it's trading for a 1 cent debit. I can't close it out. I'm looking for a bonus credit here. I still have about 25 to 30 points of buffer. So I'm looking at 30 cents credit. That's not the issue here. What I'm looking for is in the next maybe 10 minutes, if this starts offering any type of bonus credit. If we get it, awesome. If we don't, that's fine. But I'm actually welcoming in some of this extra volatility. I'm totally fine with this market doing exactly what it's doing, because what this should do next week is we go to higher IVX, we go to higher implied volatility. We'll also go to higher IV rank, which means as a premium seller for some of my strategies, I can pull in more credit and stay out of the way with some of the expected moves. Should be. Now, obviously, this market can get worse, and everyone can be all fearful and scared right now. I don't think this market's really going to do much other than this is probably my biggest buffer right here. If this market's going to offer a dip, it's going to be the 200 moving average with a close below and a close above, and that's the trade that I want to be taking. Timing-wise this year, that's the trade that I want to take. Because we could have high to low, lower high to lower low. We could, just I don't know, melt away a little bit to the downside or just drift lower. If it's this is what was interesting about this correction and even this correction. If it's a very slow and orderly drop, so let's say we drop here and then we pull back and then we drop again and we pull back and we drop again and we pull back. If it seems like it's really orderly and it's not just falling off a cliff, then I'm just going to take some of those really nice income trades. All right. So I do think this is good. But trades on QQQ, trades on MES, some hedge trades that I've got running are looking pretty good. Implied volatility is up. Our VIX is up almost 18% today. VIX 1 day is up 65%. Do I have a big drop in the SVXY? No. This would have to be like a volatility event, but I would be interested in grabbing something out of SVXY here around $46 or lower. I did take a trade on that last year. That worked out pretty nice. Dollar index, noisy today. Oil down on the day. I'm out of oil. I think it sets up what looks to be an attractive kind of strangle trade. But if there's a lot of crazy movements here, I mean, I think oil support and resistance is still fine, but I just don't want to deal with like 1 day. I mean, look at this, like 3 or 4 days is up, 1 day it's down, 3 days is up, 1 day it's down. Maybe next week this is back up again. I have no idea. But if we come down to test this low, I'd rather do this in oil. I'd rather take a bull call spread and trade it with defined risk and risk, maybe $40 to make $60 and do that for a trade that I, throw in $200 to $500 on. And if I risk $500, I can make $700. I'll take that trade, but I want to see if it technically comes to a level that I want. Natural gas, UNG is my trade. This is fine. I'm going to let this one marinate. I've got this one. If it gets called away, it's above $23. I still have some time in the trade. I was actually looking at this one today. Let me take another glance at this in slightly greater detail. So UNG right here. So I've got the 5x23. I paid $11 and change. I'm about $347 in the trade. If I wanted to roll the $23 call, so this is what I contemplated. Do I want to roll it? I have plenty of time. I'm in UNG until literally 2027, so I'm not worried about the time. But if I roll this out, there's no expiration between April 17th and June. So I'd have to add about 64 days to my trade, which isn't a bad thing. But if I want to roll it, I want to roll it up as well. So if I roll it up $1, I get an extra 50 cents of credit. If I roll it up $2, I get an extra 40 cents of credit. I roll it up $3, I pretty much break even on the trade. So if I roll it up here, I can at least chip away at my cost by 40 cents and still get it called away $2 higher, which is fine. $2.40 net profit is good. If I roll it up here, I get $3 of extra profit, but I don't lower my cost basis. So for me, the only issue with this trade is if I'm rolling this, I may not get filled at 39 cents. I might roll this and get it filled for, I mean, the bid price is 12. I'm essentially rolling a sell call, which means I'm going to have to work with the bid prices. So I'm going to try it. I'm going to try to roll this for like 35 cents. I would accept 30 cents. If it's not going to get filled at 30 cents, I'm probably not going to take this roll. So let me see if this will fill. I'll try 35 cents, which is right below the mid price. I don't think this is going to get filled, but let's find out. This is rolled to April out to May, which again, I'm adding the 60 days. I have a feeling this isn't going to fill. If it does, I'd be shocked. I'd be happy, but let's find out. So this trade, if I roll it, 35 cents not filling. I'm willing to penny this down to like 30 cents. I don't think it's going to fill though. 34 cents not filling. 33 cents. 32 cents. I'm not going to take less than 30 cents. 30 cents. Final offer. Not filled. Cancel. Okay. So I'm just going to let this one do its thing. If it gets up above $23, if this is greater than $23, change the color here. If this is greater than $23, then it gets called away for $18 profit on an 11.25 debit. So this would be my credit. This would be my debit. Not a bad return. Okay. If I don't do anything, this is what happens. If I look at rolling this, I'm going to try to roll this up to 24, and all of a sudden that becomes a $19 credit. If I rolled up to 25, then it becomes a $20 credit. So I do that. I lower my cost basis and get it called away for a higher net profit. That's what I'm trying to do. Okay. All right. So we got that going on. Let's go gold. Somebody said here, I'm looking for a pullback to enter on gold. Yeah, I'd love to see a pullback in gold. Problem is we might not even get one. There's a 21, there's a 50, there's a 100 moving average. If any of those levels are tested, I'm in. This previous high becoming resistance and support. This past resistance becoming support. I'd love to get in that trade. I wonder if gold is just going to continue to drift. The one thing that is happening right now is gold is probably one of the best performing assets in the world. And if nobody knows what's going on with the dollar and nobody knows what's happening with good risk on or risk off trading, if everything's like, I don't know, man, this is all uncertainty, gold is just going to continue to stay bid. So I'm not letting my positions go. I'm not getting crazy bullish and adding at these highs because I've been bullish on this thing since 2023, really. And I got bullish again on this breakout here, but I'm now just holding long positions. And I have some, my futures trades are all done. Those are all closed out in Q4 last year. But I have GLD credit spread, GLD ownership. And if it goes higher, I'm just going to run with it. But again, my bar count is pretty high. My space away from the 200 moving average is pretty high. I still think gold is another instrument that has a pullback, whether it's there allowing this to catch up a little bit, or it is, coming in later, stretching away further, and then we put in a top on gold, and then we start to work our way down, go sideways, and then all this catches up, right? So I just say, look, I am not a day trader or scalper on gold. I'm running with mostly a swing and leap position where I'm going out over 12 months, and those are looking pretty good as long as we stay higher. If I get dips on gold, I'll be adding to my exposure. If I don't get dips on gold, I'm just going to benefit from the melt up, and I'm not really adding a bunch to it. Okay, silver is fine. I think it still has room to get up to 35, almost $36. Bitcoin, a little bit of a pullback today. MicroStrategy is down. Holy crap, down below 302 now. Let me check and see. I've got a collar trade out to May. Let me check and see where that trade is at right now. So this one on MicroStrategy. OXY is going to get called away at $50 today. That's in the next 20 minutes. That's good. I'll take that. That's going to turn that into a nice chunk of profit. OXY should be, I think my break even on OXY is 48.63. So I make $1.37 times 500. I make $685 with this one getting called away today. As long as it stays above $50, which I think it will. If I wanted to roll this, which I might, but I don't think I'm going to. I'm just going to get the buying power back. 500 shares at $48. That's almost 20 grand of buying power. I'm just going to get the buying power back. A roll on this one out a week. It's like, that's not bad. That's another $250 profit. It's not bad. But the question is, what if OXY drops down to 49.90 or 49.70? Then I'm fighting the trade again, and I already fought through it a little bit. I'm not really sitting on this trade to fight it. So, we came all the way down here like $45. I think realistically, this could be in a choppy range where if we came down low enough, if we get the stock called away and we come back down into this level, I wouldn't mind getting another position at a much better price in like the $45 zone and even putting in like cash secured puts there. So if I get it called away, I'll take the repair, take the money, and then if it comes down to a more attractive level, then I'll buy some more. I don't mind the trade. Okay, so that's OXY. What else? Japanese yen future trades doing really well. I'm up a couple grand on that one, so I'm up almost $3,500 on my Japanese yen futures. My hedges, this is S&P futures, $1,800 profit, $1,100 profit. Copper is down about $175. Micro futures, that would be up $2,200 right now, and that's cranking some pretty serious hedge profit, which is pretty exciting. I'm also hedged out this thing to like April. So if we get a big sell-off into March or into April, all these hedges pay out pretty well. Now, what that is this is really the benefit. See, I'm down $21,000 today. Okay, I'm down $21,000 today. That's less than 1%. Okay. Now, what does that mean? Well, if I'm down $21,000 here, why is that important to have hedges? Because right now, even though I'm down almost $22,000, let's take 22. So I'm down $22,000. Okay. But I have a hedge that's up $3,500, so I can track $3,500. Another hedge that's up $1,855, another hedge up $1,200, and another hedge up $2,200. So realistically, a $22,000 drawdown is only down about 13 grand. And 13 grand out of my total assets here, that's pretty much nothing, right? $13,000 divided by, that is a 0.4% drawdown today. It's quite manageable. And that's why I hedge. Because if I need it, it helps offset some of that. And then I can also use all the cash that I have at the ready, which is a decent amount. I think I might be about 40% cash right now. 114 divided by 3. I'm sitting about 37.5% cash. Plenty of cash to deploy. All right. So, it is what it is. It's trading. OXY, I'm going to let it get called away today. Snap, I just did a update on. Okay, good. Coca-Cola is getting called away today for profit. MicroStrategy. Let me take a look here and see if my put is looking better. It's an out-of-the-money put for protection. This is my trade here. Where is my 310? 310 by 240. Right now, that put side is up a little bit, but I'm going to let this thing run. In case this thing gets gnarly to the downside, my put that I paid $10 for is now trading for about $16 to $17. So that trade right there is actually showing profit. I could get an extra $6 or $7 to lower my cost basis, but I'm going to keep it there just in case. Because if MicroStrategy, it shows a little worse for wear, and all of a sudden we're talking MicroStrategy back down to the 144, the 200 moving average, I need to be able to lower my cost basis. Right? So if this is going to drop, I need to take that long put and protect that profit. And to do so, I'm going to have that protection. That is why I'm in the trade the way that I'm in. I still have a break even at 269, but if I get a $10 debit that all of a sudden pays me $25 credit, that's another $15 I can lower my cost basis and also roll my calls down, and I can still repair this trade. Right? If we're greater than 310 on MicroStrategy, that is paying about $4 grand. I've got 3 accounts that are doing that. So it's about a $12,000 profit right now if I don't do anything. But I'm going to be active and I'm going to, manage the puts and manage the calls and all that stuff. But time will tell. All right, 345. Any bonus credit on my SPX butterfly? Let's find out. SPX right here. 1, 2, 3. I'm getting some bonus credit. That can be good. I'm not going to close it out yet. There's 10 cents. There's 5 cents. So I'm going to hang on to it a little bit longer. And honestly, for the next 15 minutes, if this shows anything like 15, 20, 25, 30 cents, then I will look to close it out for some bonus credit. Otherwise, I'll take the full expiration at 30 cents, and that's my profit. Okay. Let's see here. All right, I think we're good. What other questions we have? Last 15 minutes or so. It's been a pretty wild week. A lot of trades. I don't even know what the number was this week. I think I don't know. I probably took over 100 and some trades this week. It's pretty typical. MicroStrategy down. Let's just keep going through the top down here. Ethereum, nothing crazy. Bitcoin is still showing some resiliency. I like the 91K support. Let's see if it bounces. So if we bounce hard at 91,000, we're still just range bound. The concern would be that S&P is down, NASDAQ down, Dow down, Russell down. If those are breaking lower and Bitcoin breaks lower, there's still room for Bitcoin to fall. Bitcoin could fall into about $80,000, but I would be okay reestablishing some new positions to get back to the highs again. Right? I mean, if anyone has been in Bitcoin for more than a year, you have seen and felt 60 to 80% drawdowns at certain points and pullbacks, right? So if you've had 60 to 80% pullbacks, this is nothing, and we know it's volatile. So if this is a, high-low pullback, I mean, we pulled back about 16, almost 17%. Big whoop, So, I mean, would we have to be prepared for like a 30 to 40% pullback? Maybe. That's 32% right there. Filling that pocket's about 35%. I mean, I would be fully braced for a pullback into this previous all-time high, right? So, I mean, if we stay range bound and it's more accumulation, so be it. And that's fine. But if we pull back deeper, look left, there's good resistance to become support. That like low 70s, $70,000 mark is a good spot to look to get back in. I think that's a good way to get long, actually. Okay, so that's that. Copper's hanging in there. Got a little income trade down below that. Japanese yen futures doing really, really well. I'm looking to take my max profit's about $1,200, and I'm currently up about 500. So there's still some time left in the trade. I'm unlikely going to see the max profit here unless I want to wait all the way to September, which I truly don't. So realistically, if I turn what is my risk at 687, if I can start to see $700, $800, $900 of profit, I'm going to go ahead and just take the profit. Is there another way to roll out an underwater call debit spread over credit? A call debit spread for credit, highly unlikely. So give me the numbers here, Mark. What do you got? What's the instrument? What are you trading? So a debit spread is going to be very difficult to roll for a credit. Unless you go like, I don't know, you'd have to go way, 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 maybe in the money, which obviously lowers your probability of profit. So, I mean, if you want to tell me what you're trying to roll, I can try to help. Nikkei still sideways. FXY looking good. I own some shares of FXY, so my 6J and FXY are looking good for the Japanese yen. FTSE is down. DAX is down for a couple of days in a row. Finally, this is another one that stretched a long ways away from the 200 moving average. I think we're going to have a bit of a pullback coming out of Germany. UK, same thing. Argentina, interesting. Popped to the upside and then falling again. Probably just more chop suey. Chop suey. I'd like to see a pullback at a level I would be interested in buying in. Costco. So you did a 1060 by 1080 bull call spread. Okay. This is my trade. So a bull call spread that is down. What's the expiration on it, Mark? March 21st. Okay, let's have a look. All right, I'm going to come back to spot this SPX here in the next few minutes. I might not get anything out of it, which is fine. But if I get any bonus credit, I'm trying to get that. So Costco, March 21st, you have a 1060 by 1080. Okay, so you bought the 1060, sorry. So 1060, sold the 1080. Right now, what'd you pay for it, Mark? I'm showing it trading for 625 right now. You're 20 wide. What'd you pay for it? And do I have this right? This is a bull call spread, right? So you bought the 1060 and sold the 1080. So 20 wide, man. I hope you didn't pay more than $10 for it. But I have a feeling you may have. I don't know the trader slates, but give me the price. What'd you pay for it? Right now it's showing about $6.67 debit. Costco is another stock that probably has a top. I think that's going to form. Here's what I would consider. I don't know. I mean, going out to March is fine. If Costco hits a 21 moving average and it comes all the way back towards the highs again, that wouldn't be a bad spot to just get out of the trade. If you can get a break even or better, I think that's a pretty decent trade. And I'm saying that because, again, this bar count is extremely high and this distance away is extremely far, right? So we haven't hit a 200 moving average since 433 days or bars ago. So, I mean, that translates into calendar days like almost 2 years. So this would have been May of 2023. It's been a long time since we hit a 200 moving average. So I personally am looking at this thing to find its way. If we come back into a range here, then maybe getting out near the highs and trying to turn your 1063 break even or better. Otherwise, I think this thing is going to fall. Not maybe super aggressively, but there's previous resistance here that could offer up some support. If this market's really aggressive, then a 21 or 50 moving average could be enough to offer a bounce. But I still think at 400 plus bars, we're probably looking at more of like a topping pattern happening sooner than later. So, okay, two things. One is your 1060 by 1080. If we come back up here to get you at 1070 or better, I would just take a break even trade on it. If I'm in the trade, that's what I personally would do. I wouldn't want to lose on it. I want to give it a chance. But the flip side of that would be if we're down, let's say to this like 100 or 144 or 200. Look, man, if you lost 1063 on the trade, and I know nobody wants to do that, but if you lose 1063 on the trade, I love the trade down here where I could just take a second contract. If this is a one contract and I lose it, I take two contracts here and do a similar trade, and I can make that up where I make $2,000 on this trade and I lose $1,000 here. Okay, so it sounds like you're in the right spot. So you put a sell order in at $11. It gets you out of the trade. No harm, no foul. To do that, the 21 might offer a bit of a bounce. That's fine. That's fine. Yep. Let me see. I've got a Costco trade in. I think my expiration is out to next week. Costco is yep. So next week I've got that 1111 trade. So I pulled in $1.15. There is a trap around this 1100 zone. So I'm giving myself a pretty good wiggle room. Like next week, this thing would have to rip up to $1,100, and I have a $1,000 profit trap here. So this trade for me is almost like little to no risk. I'm pretty happy with that one. Same thing with Meta out to next week as well. You did something similar on Crowd. Okay. Yep. Crowd is cybersecurity. I mean, I just look at this initially, something like that. There's a channel. So if you did the bull call spread and it's pulling back again, if we snap back up, try to get a break even or better. Otherwise, I like this kind of technical support zone where CrowdStrike looks pretty good. I do think cybersecurity is probably a safe place to be. It's going to be volatile, but I think it's a pretty good place to be. I wouldn't even mind looking at CrowdStrike if we sell off a bit more. That coming back into like the 144, the 200 moving average, or coming back into this low, that kind of this window would be where I would consider loading up some income trades. So if a bull call spread doesn't work, there's always another trade around the corner. Just find the levels that you want. Yeah, 528 debit. Yeah, I'd put in a 550 sell debit or something, or sell credit to get out of it. And what's your price? What do you need price to come back to? 456, 455 is the previous high. So what's your strike? What's your sell call strike? All right, final 5 minutes here. Just let me double check and see if I'm getting any bonus credit out of this broken wing butterfly. Nope. It's all right. I mean, I'm still like 27 points shy of my pin price, so it's just not offering me any bonus credit, which is okay. All right, so that is looking to settle in the next 5 minutes. That is another winner for daily profit play right there. So that 30 cents is likely going to expire in full. Okay, fine. I'll let it officially close here in 4 minutes before I take it. But net on the week, that's not bad. Not bad, not bad. $145 on the week. And I say that like I'm happy with that because I took a loss yesterday. That was a full loss. I took a partial loss today, which I'm glad I did. We put on a hedge. So it was a kind of a wild week, but the fact that we carved out some net wins and net profit, I'm actually pretty pumped about that. Double Up Alert did really well this week. We had two winners that were big, one really small loser, and then a newsbreaker service that was I think five or maybe wait. We closed out Carvana, ENVX. MicroStrategy was a small loss at 13%. The other ones were like 30 and 50% winners. And then we have Toast and Wayfair looking good for profit. I'm going to see what those look like on Monday. So those looking good. Okay, you got the 440 by 450. Yeah, same thing, man. If it comes back up and tries to retest a high, get out of that thing. Take a small loss, eat your lunch, swallow your pride, go find another trade. But I'm, like I said, I think this market is okay with a pullback. And if we have, and what's going to be interesting is if now until March, there's like some really silly, like the market's just going to flush because it's been clinging to these all-time highs. But today is probably the one real feeling day that it feels like the market's letting go and so those all-time highs are slipping. So if this is, more, and look, we got some real news that are hitting, right? Walmart's concerned about the consumer. Amazon is concerned about consumer because of Walmart. So is Costco. You can see those stocks reflected the same type of movement. So Walmart is down a ton this week, right? I mean, this is a giant drop on Walmart. The nice thing is my collar trade is hopefully going to offer up some profit. I might end up rolling it out a little bit longer. I don't mind owning the shares of Walmart here. I want to own it more in the low 80s or 70s. This is dropping really nicely. I'm probably going to put in some more ratio spreads or whatever. Costco, which is crazy at $1,000. I could see Costco ranging around. I still have my broken wing up here that I'd love to get a trap on next week. And then Amazon is well below my. I had an earnings play. I just didn't go out far enough on that trade. So 222 is what I wanted. It did hit the expected move. I just went out to the wrong expiration. That's my bad. But it did what I expected, and now I just have puts and protection and covered calls and rolls. And I still like Amazon. Do we come back down to like a 144 to 200 moving average? Sure. If we do, I'm selling some premium. If I get assigned any shares, I'm keeping some shares. So I don't mind it. But I would say that the first big break in news and saying that the consumer might be a little bit strapped is Walmart, one of your largest retailers, which has been surpassed by Amazon, by the way, for total revenues and in annual revenue. They're just showing like, hey, maybe the consumer is not just buying everything that it possibly wants, and that's a little tough. And on top of that, if we see a softness in the labor market, you got the Fed that doesn't want to do anything rate-wise. They don't want to cut rates. That's going to be interesting. I don't see the dollar doing much. Like the dollar index isn't changing much. The U.S. 10-year is still really sticky. So we're down a little bit. Okay, cool. That doesn't really change anything. Are we down to like crazy amounts of lows? Is this like lowering the mortgage rates a ton? No. We're down 0.02%. Like this is a BS. Like this improvement is nothing. So we still have like a crappy housing market with a consumer that's stretched really thin, inflation still running really hot, hot and hotter and higher than what most people want, and the Fed data like the CPI, PPI, PC combo is just not. It's just not a real. It's not a real reflection of what inflation is truly doing. If you're looking at like live cattle, you're looking at orange juice futures. You're looking at coffee or cocoa. I mean, my gosh, man, it's like those are sitting at crazy highs. Those markets have been doing crazy things. So anyway, all right. That being said, closing bell just grabbed another 30 cents on SPX, so that's good. Take the profit there and running. And the risk on that one would have been, what's my max risk there? $20. So 1970. Okay. So yeah, I took a lot of risk on that trade, but I had a high probability that was going to get filled. So I'm taking the $30 winner on SPX, net positive on the week. And overall, interesting day. I mean, seriously, like this market started to show some frailty yesterday with that really aggressive sell-off. We spent the rest of the day pulling back, and then what happened today? Monthly expiration, and the market didn't like it. We're sitting here just at the all-time highs. I mean, I've only been saying the same thing for the last month. I'm not that bullish, right? And that doesn't mean that I'm bearish. It's just hard for me to believe that this market's going to blow these tops off. So now this momentum to me looks like the bears just got the upper hand a little bit today. So next week's going to be an interesting week, but I do know how I'm going to approach it. I'm going to tackle this with we should have higher implied volatility. I can sell some more premium, get my trades out of the way, and see if this market can catch a bid, catch a bid, catch a bid. Maybe it does. Maybe we have like this nasty cycle where from February until March, this thing is going to drop where I expect it to. You know, I'm just telling you, buckle up for some volatility because if this market wants to drop to where I see it technically, we could have a nasty, nasty correction, right? That would be dropping about 7%, potentially into double digits, where if we have like that 7 to 10% window, that's what happened back in July and August. If that repeats again, that's just a lot of volatility. We get another single day VIX event where it goes crazy to the upside. It hasn't happened yet, and it might be this too. This market might just do this and do this and do this and do this, and it never does anything. That's too bad, right? But it can get a little nasty. So I don't think the market is just full on, they'll run for the hills and everyone exits. But it is making bonds look a little bit more attractive. Okay, TLT is up, breaking the right side of this trend line. Does make TLT look a little bit more attractive. I have my covered. It's a diagonal spread on TLT, and this one is sitting in profit. Let me go to TLT here. Okay, so OXY is getting called away for profit. That is very nice. I have some shares, so that is 1, 2, 3, 4. That's 2,000 shares getting called away. So 2,000 shares getting called away for about $1.40 each. I'll take the profit, move on, get a bunch of buying power back. I do have some fractional shares there, which is totally fine. If I go into my TLT position, I want to take a quick peek at that. TLT is here. Not Tilray, TLT. I'm up around $7,000 on TLT. The call is April 30th above 92. So the trade is right here. I am in for a break even of a 21.32 debit. My profit here is around $26. My break even price is 86.32. We're trading at 89.60. If price gets greater than 91, then I can look to roll that out if it's worth it. Otherwise, I'll just let it get called away. I'm going to make like 4 to 5 grand per account that I've got this trade on. So it's I don't love TLT, but for the near term, if the rates are coming down or the bond or the equities market's going to sink a little bit, it will make bonds a little bit more attractive. We're going to break that high correlation we've seen where bonds and equities are like a 0.7 correlation. That needs to change. It's probably going to change, and I would probably give the upper hand to the bond market right now. So it's not a bad thing. Like that's a reality check. Equities can't keep going higher forever and having this crazy high concentration. I've said this for the last month or so. The market can broaden out in a bear market, and it might suck to feel that way because that Mag 7's done so well for so many years, and all of a sudden the Mag 7 is sideways. Nvidia has earnings next week, which may be the thing that kind of saves and builds in some resiliency. But if Nvidia, this is a big if Nvidia has a rough earnings print next week and the market doesn't like it, just be ready for some ugly trading. So, I mean, that's why I have some hedges. So, my 20 grand drawdown is only really down about 10 grand with hedges. Those hedges continue to blossom out some profits, which is nice, but I will be aggressive on how I manage them. But I just need to keep spot checking my levels. Okay. Like, look at this today. MAGS, which is the Magnificent 7 ETF, is down towards these lows we saw back in January. If it takes out this low, okay, there's still room to fall. If the Mag 7's going down, I don't care if 493 stocks are fantastic. The market cap is so large that your SPY and your Qs are likely going to be going with it. Like this will drag the market down. Okay. So anyway, we've had a lot of run since this test. Again, like another 400 to 500 bars. So I could just see a little reality check, about 328 bars, 330 bars. It could also respond like next week is NVIDIA earnings. Maybe it kind of saves the day. Maybe it doesn't. But like I said, this is probably the first day of the new year where it looks like the bears have shown their teeth and the bears are, getting the upper hand. There's been this is all stuff you can't control, right? This was DeepSeek. This was tariff. This was tariff. That's news. You don't really know when that's going to happen. But today was just straight up price action and a sell off. And bears look like they did some damage today. Okay. Did they take out these, previous choppy lows? No. And so there's still a chance to bounce right there. But just in this level here, that low to even this low, this market still has a little bit more to drop. So, okay, bring it on. I say bring it on. Another 2.5 to 3% lower. It's okay. Is that a drawdown where everyone needs to be freaking out and panicking? No, it'd be about a 5% correction. Now, if 5% becomes 10%, it's not going to feel good, especially if it happens in, I don't want to throw it out there, but if we go through a COVID spell again, and I'm just saying it's like price action that's similar, where we're down 30% in a 30-day window, that is going to feel pretty crappy. That's going to be a very dangerous environment because there's going to be way less liquidity. This is why I have almost 40% of my portfolio in cash, because I want that cash at the ready to then deploy. Because there are ways to get some trades in where if you can get a reasonable bottom over a 60, 90-day window, you might even be able to catch the bottom for the entire year. It's hard to tell. So we will continue to trade, continue to grind, and I look forward to trading with you. All right. A couple things here. I'm going to get my video update to Daily Profit Play members. Let me browse this, put it in my Vimeo folder. So Daily Profit Play update. All right, so I'm going to process that video on Vimeo. I'll send a direct link into my Telegram channel. So for Daily Profit Play here, I'm going to post a video link. So Daily Profit Play strategy discussion video update. And I'll post the direct link there. It'll also go into your classroom so you can have it. But when this video is ready to post, I'll post the direct link. It's going to be a big, long, stupid link, but just click on it. It'll take you to direct play. All right. If anybody's watching this session that's not already in my sessions, you're not in my Telegram channel, you're all welcome to join my Telegram channel. 1649 subscribers. My Discord's around 1,000 plus. My YouTube channel is at like 9,000. It's like 8,800 right now. Again, real people. Organic growth. I'm not doing any funny stuff like, Google ads and try to hack the algorithm. I don't care about any of that stuff. I'm hoping at some point when I'm doing this for 10 years, YouTube's like, hey man, congratulations. And all of a sudden they start helping out my algorithm by supporting my my videos. Until then, the best way to help support my channel and support this content is to literally leave a comment and thumbs up every video that you watch. And that is so stupid and so simple, but it's what truly helps. That little engagement, whatever that does for the algorithm, is good. So anyway, that's what helps. But if you want to join my Telegram, you are more than welcome to, for anybody that's just watching this video or coming in for the first time. So here it is, Telegram, Chris Pulver, Telegram. There it is. Okay. All right. So that video is getting optimized. Okay, good. I will post that video in my Daily Profit Play Telegram channel. All in all, the week is over. It's fine. And let's see what happens next week. So hedges are proving to be good timing and worth hopefully a lot of money. So right there, a lot of hedges. So if this can translate into, down 30 grand, if this translates into like 15K to 20K, it helps eliminate and alleviate some of that. And then I'm ready to, bounce back. And so when this gets back to the highs, I've got the hedges on top of that and it just adds to the bottom line. So it's not fun, but I'm down about 1% today. Okay. Does it ruin my year? Nope. Not even close. It's just a day. I'm net profitable on all my services. It's been a good week overall for income. My net result for the week, it was pretty solid. Let me see here so I did, where's the pro pod at here? Where's it at? There it is. Okay. So daily profit play 5 for 7, double ups 2 for 3, newsbreakers 2 for 3, close out a winner on IBIT, I think. Yep, close out a winner on IBIT, close out a hedge winner on SPY, Netflix, Broken Wing Butterfly, close that for profit. Coca-Cola got it called away for profit. Had to say above $69. Is it 71? Holy shnikes, man. I guess I should have just bought Coca-Cola at 60 bucks, huh? Doesn't matter. I'm out with profit. That's fine. Coca-Cola getting called away for profit. Snap rolled that one out. OXY got it called away for profit. Coin had a winner on a ratio spread right here. Coin's at 235. This one is full profit for $1.03. I've got some more trades out into March that I'll be watching closely. That's a pretty nasty spill on Coinbase. PGR closed out for ratio spread profit. Trade up here near the all-time highs. This one was worth $2 and change. So five, yeah. So I think I pulled in. So if I got the break even here, 225 minus 5, what's that break even? So 225 minus 5 minus 217.35. That's a 265 income trade. Not bad. So a little income there. Is CB looking a little bit better? Yeah, it's hanging in there. It's resilient. I got some ratio spreads on this one out to May. And then what else? I think that's it. So, I mean, overall, it's a lot of trading. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 winners. 2, 3, 4, 17 winners, 4 losses. Not bad. 17 winners and 4 losses this week. I'll take it. Just another week, just another grind. The usual. Okay, TCOM. I don't even know what it is. Trip.com, $67. I'll look at this one next week. Is this like TripAdvisor? Is this like William Shatner type stuff? Is this the right stock? I don't know, man. I think that there's a bunch of chop in here. So either this thing is choppy through earnings, or we actually have a potential breakout one way or the other. I really think that the most important thing next week is going to be NVIDIA. For better, for worse, I think NVIDIA is probably the single-handed most important stock of the year so far, and probably the most important earnings that the market's going to have. And the reason why is because good NVIDIA could mean lift the market, lift the Mag 7, market cap weight goes way up. But somehow a miss or investors getting a little squeamish on NVIDIA, just say brace for some volatility. And again, we could have a broad market fall. If NVIDIA fails and the market doesn't like it, man, we could have S&P down, Qs down. We could have individual stocks just, you can't win. You can't win. Like there's nowhere to hide when the market sucks, right? You can hide out in hedges. You can diversify in Forex. But the hard part is you can't really chase that direction. So it's either you're in it already and you're benefiting from like the nasty move down, or you're just trading to find risk and hoping for the best over a 30, 40, whatever your time duration is. So I think a lot of next week's positive or negative flows are going to depend on NVIDIA, which is stupid, but it's probably the reality. I can see the market being very much like waiting with bated breath on like what's NVIDIA going to do, what's the market to react to it, is it positive, negative? We'll find out. Okay. Did you close the IBIT bonus trade for profit? No, the IBIT bonus trade is still way down here. I did the trade in the 40s. So the trade I closed out was a 52 by 51 credit spread. I got a bunch of those scattered in. So that bonus trade I did in the 40s, that's still valid. I'm still taking that trade. That's right here. IBIT. So my bonus trade, where's it at? That one. April 17, 46 by 45. Let me group this one. So that trade right there. If it's up a little bit of profit, I need more time in the trade. I'm willing to take the assignment. Yeah. Omar says, you want to be assigned? Yeah, then hopefully you let it go below 45 bucks. You get assigned. If you don't want to get assigned, then you're just going to take the income, which is about $66 a contract. Or no, about $1, my bad. About $1 per contract. Okay. All right, everybody. Happy Friday. Enjoy the weekend. I'll be back on Monday. Yep. See you then. All right. Thanks, everybody. Again, if you're subscribing to the channel, great. YouTube.com/Chris Pulver. You can subscribe to YouTube.com/Financial Wars as well. Make sure you thumbs up the content, support the channel. That helps a lot. That's all it really takes. All the comments I see, I go in probably once a week and answer questions if anybody's asking. I've got a Discord channel, got the Telegram channel, all free to follow. I do this stuff every day to help traders. If you're more interested in my services, daily profit play, waterfall income, double up alerts, news breakers, I run those services all week long. Cool. All right. Thanks, everybody. Have a great weekend. See you soon. Bye.